Welcome to Industry Focus, the podcast that dives into a different sector of the stock market every day. Today is Thursday, May 19th, so we're talking about energy and industrials. I'm joined by Motley Fool analyst Taylor Muckerman, and we're going to be talking about a possible Royal Dutch Shell spinoff and scores of energy bankruptcies. But first, Taylor, why are Canadian wildfires actually affecting oil production?
Well, there's a lot of oil production in Canada, shockingly enough. These fires closing in on over 700,000 acres of destruction. A lot of homes destroyed, businesses destroyed, families displaced. Originally, you didn't see much oil disruption, but this has been going on since the beginning of the month, and now they're looking at 1.2 million barrels a day of production taken offline.
Wow.
That's a lot. That's a lot. So
the U.S. consumes 15 or 16.
Yes.
So, I mean,
that's basically the overhang that the world was seeing, taken offline just like that. So when you see these oil prices climbing as they have been the last couple of weeks, might not necessarily be an honest representation of what's going on in the market.
Right.
Because you've got not only these wildfires knocking 1.2 million barrels a day of Canadian oil offline, but Nigeria's got about 500,000 barrels a day of disruption right now. Venezuela's losing production. So you're seeing some one-off instances here where this production is going to come back online. Canada thought it was going to bring back 1 million barrels of oil sands oil back online, but the fires have reversed course back towards the oil fields. So nothing is necessarily in danger, but they've shut down the production, and a lot of people have been evacuated. Suncor evacuated 8,000 more folks earlier this week.
Is this like throwing people on helicopters or like what?
I'm not sure how they're getting out, but they're gone.
A lot of people, yeah.
So they're keeping like some mandatory personnel there just to make sure that the fire prevention mechanisms that are in place at these production plants and with Enbridge at their oil terminating facility, which is one of the largest in the area. So the fire reverse course, I believe that I saw was within 1 kilometer of Enbridge's the Cheecham oil sands terminal.
Mm-hmm.
So big deal. They say the oil is still running through the pipelines, but they have a limited amount of personnel on site.
Wow.
Yeah. So big deal.
Good time for a low-cost Canadian vacation?
Well, yeah, I guess if you know, because the airlines are actually doing the right thing, and they were actually offering free airline travel to families that were having to be evacuated from their homes.
As they should, yeah.
Absolutely.
Do you, really quick, just before we move on, oil, early this year touched down at $27 a barrel. Now it's in the high 40s. Yeah. It was interesting to me, given that we had this, 2.5 million barrel oversupply, that wasn't pricing in anything like this. And everybody the whole time, over the last year was like, this is not pricing in any kind of disruption at all. I guess, in a minor way, the chickens are kind of coming home to roost.
Yeah, well, when the oil prices were above $100 in 2013, 2012, you saw a lot of Middle East disruption, and nothing really happened to oil prices because there was just so much oil being produced. People were just giddy with how much was going on. So whenever you see oil prices react to things like this, you can maybe see that things are starting to normalize.
Okay.
But yeah, I mean, it's tough to see something like this coming, like 700,000 acres destroyed from a wildfire.
Right.
It's pretty crazy.
Cannot predict that.
No.
So moving on to our a larger story. Actually, in terms of just investing takeaways, Royal Dutch Shell bought British Gas, as you, me, and Tyler Crow talked about multiple times, for $70 billion, mostly a natural gas producer. It kind of shifted Royal Dutch Shell's, product mix and everything.
Yeah, they had a lot of offshore operations, yeah.
And now they're talking about spinning off $40 billion in assets.
Yeah, so almost a reversal, of course, if you look at $40 billion versus the $70 billion.
Did you kind of roll your eyes and shrug at this like I did?
It was a chuckle. It wasn't a shrug. It was more of a chuckle.
And they're just complaining about the balance sheet. Like, we just got too much debt now.
Which they do. You've seen it go from $43.8 billion
in total liabilities.
Yes, in debt from the first quarter of 2015 to now around $81 billion in the first quarter of 2016.
So it doubled.
Yes.
Yeah.
And cash flow is not doing the same. It's going in reverse order. So they're losing cash flow. They're picking up debt. So they're trying to figure things out. They've been talking about trying to sell some assets, but we've seen Halliburton. They tried to sell some assets to merge with Baker Hughes, and it's just not the right time for if you're a struggling small producer or something. There's a chance you're going to get bought out because we're talking $40 billion, and that's a big acquisition for anybody.
Right, and that's what they're debating because they're like, okay, we're either going to sell these things, or we actually might even be willing to spin these off into a baby shell, an IPO.
Right. Yeah,
like what? Is there a precedent for that?
They've done it before. I can't remember. It was in the last few years.
Well, they spun off their midstream assets.
Right. Yeah, it was much smaller than this. Right. But they've done it, but I don't know if it's something that they're necessarily. That's probably not their type A. That's not their choice. Like that's not their number one option. But if it needs to happen, I've seen one suggestion that it could happen within 12 months.
Wow. Do you this even reminded me of like, oh, we regret doing this or got too much debt or something. Do you remember when the oil downturn first started and Whiting Petroleum was like, oh, we're going to put ourselves up for sale?
Yeah.
And like nobody.
No, they tried several times. Yeah, they're just like begging to be bought. Maybe that was them realizing what was to come. Who knows?
Right.
Maybe they had a better crystal ball than everybody else. But
yeah.
I haven't actually followed up with them, so I don't know.
Their stock's just down. They're hanging out. Maybe it's a buy now. I don't know. Like
maybe Shell will buy them once they spin off $40 billion worth of assets.
The other little side note to the announcement that the Shell made was they're talking about throwing their CapEx budget this year is like $1.7 billion or something. And they're planning on putting a chunk of that into alternative energy investments. They did not give any specifics other than the name, which is New Energies.
Yeah.
Think they're going to buy solar something. I don't know.
That's not a lot of money on a global scale for renewable energy, so maybe it's just a small bet. But I don't think not a public U.S. traded solar company. No.
Right? Yeah. No way. Cool. So moving on, we got a bunch of news lately, and it's probably been a long time coming. But
yes.
Bankruptcies.
Yeah, the bankruptcy court is doing a lot of work.
They've been
days.
busy.
They're making some money.
They've been busy. So it was who was first? Was it Sandridge or Ultra?
Ultra Petroleum was, I believe, maybe a couple weeks ago.
Okay.
I don't remember the exact date, but yeah, that was a really big company several years ago. Mostly East Coast operations, natural gas predominantly. Despite the name petroleum, it was mostly natural gas.
Were they just a high-cost producer? Did they just fly too close to the sun and take on a bunch of debt, and now they're doomed, or
yeah,
what?
They were part of that early land grab that Chesapeake and Sandridge in the early 2000s.
I cannot believe Chesapeake is hanging out, by the way.
I know. They're doing a lot better than what most people would have expected.
Do you think that's because they just have so much stuff that they have more wiggle room, like kind of a too big to fail, kind of a we can sell this little thing that we don't care about?
They are very diversified. You got that right. And they have done some sales. And I think some of their creditors have been a little bit more lenient with them, maybe doing some restructuring of individual. So not bankruptcy style restructuring, but they've gotten not handouts, but something along the lines of, hey,
right,
we're going to give you a little bit longer leash if you can sell some things, which they've been able to successfully do. So a lot better situation than I probably would have expected.
Why do you
years
think
into this.
Chesapeake has been so successful selling things, but Shell, I mean, we're like sitting here giggling about them selling some of these assets. And it's like, haha, yeah, right.
Which I think just the sheer size of what Shell would need to sell. And Chesapeake, to his credit, Aubrey McClendon, he knew where and when to buy, know where and what to buy. Maybe not when, but knew where and what to buy. So they had some good assets.
Okay.
So
a lot of reserves, low cost reserves.
Right. They're natural gas, oil. They had a lot of it, and so they were able to kind of pick and choose. Not only they weren't just going to sell out of an entire region. They could kind of pick and choose around the United States what they wanted to shed, and they've been able to raise cash as a result.
Got it. So then came was it Sandridge then Lynn? Sandridge was
no, I think it was Lynn, and Sandridge I feel like just reported.
Okay.
Yeah. So Sandridge was the latest.
Lynn, even at the end of last year, they had a negative equity value on the balance sheet.
Yeah.
So I was looking at their production costs a couple of weeks ago, and I was like, they just took on too much debt, man.
Yeah, they were one of the first production MLPs, and so they had to just keep on taking on debt in order to continue driving that distribution higher, because that's what everybody was investing in them for, was distribution growth, because the shares weren't going anywhere, and they had to keep drilling in order to produce that cash flow to service the debt and the distribution. So it was a snowball, and they got it way out ahead of themselves.
Yeah, and it's a sad thing, because what distinguished them from the other MLP that we're going to mention in a minute, Brightburn, was they actually kind of went out and found the oil, as opposed to Brightburn, which just bought slightly declined wells from other players and they just milked it for cash.
Yeah, which, arguably maybe that was the wrong move, because producing it, drilling, finding it, all that is more costly than, you see a lot of these enhanced oil recovery techniques where if that's all you're doing, you can kind of specialize in that. Whereas if you're going out exploring and producing, there's added cost and there's potentially greater mistakes.
Do you, in your opinion, is that why Denbury DNR is holding up okay? They just go in there and throw in some carbon into the ground. Carbon dioxide.
Enhanced water flooding, carbon dioxide. They refract these wells with a greater degree of sand and pressure. So if that's your specialty, Devon Energy's very good at enhanced oil recovery.
Yeah.
So if you can go back in, they're leaving a lot of oil in the ground. And not just one or two companies, but everybody's leaving a lot of oil in the ground. So if you can figure out how to go extract it and avoid the cost and time to drill, then you're eliminating a lot of cost out of your overhead.
Were you surprised when Brightburn, which declared on Monday, I mean, this is, body's not even cold.
We don't let them get cold.
We don't let them get cold. Well, they won't. I mean, somebody else is going to get these assets. Like, they're still producing. They took out $75 million in debtor in possession financing. I mean, the wells are going to still keep going.
Yeah, Sandridge.
Same with all
they're going to be able to produce through this restructuring, and they're going to concentrate on Oklahoma and Colorado projects. They don't plan on laying anybody off. Brightburn, I don't know about layoffs in their case, but yeah, they plan on operating right through this refinancing.
It was just so surprising to me, because you look at the balance sheets of these guys at the end of last year, and they just declared, so they didn't really bother, putting out quarterly reports just yet.
Yeah.
But Brightburn had $4.9 billion in assets and $3.5 billion in liabilities, so that leaves $1.4 billion in equity as of December 31st, which is just 5 months ago. Yeah. And Lynn was up there; they had $10 billion in assets and $10.25 billion in liabilities. I mean, I've seen worse.
Lynn was the largest bankruptcy since the oil downturn started.
Since Thanksgiving,
since
2014. Yeah. Wow. I'm kind of surprised. I don't know if Brightburn's cash flow is just so bad or what. I was just surprised, just from a balance sheet perspective, that they declared.
Well, as an energy producer, cash flow is the lifeblood. So and I think if oil prices if they had still been in the $25, $35 range, I don't know if creditors would have been as friendly as they've been with these companies, because maybe they have a little bit of faith that if they just give them a little bit more time,
so you think
oil could come back.
You
to
think
50
we'd be having
this
bankruptcy conversation about these names months ago had oil not come back a little bit?
Yeah, we've seen these bankruptcies take place, but I don't know if they would have the restructuring capabilities. So they could have waited this long to go bankrupt, but I don't know if they would be able to operate through the bankruptcy restructuring, because I don't know if creditors would have given them, like I said, not necessarily a leash, but they wouldn't have just given them the needle and said, "Sorry, we're putting you down."
So what do you think dragged down Sandridge?
Sandridge, again, not enough cash flow, a race to produce, and this has been a long time coming. These shares were $80 a share in 2008. They're like 2 cents now.
Yeah.
So if you look at the chart, even since 2012, it's just a steady decline until 2014, and it's a much steeper slot. Yeah. So to pinpoint it, one exact thing of why it's going bankrupt, that's a little tough. I think it's just it was happening slowly, and then it happened quickly.
Do you so the key takeaway that's slightly more positive is I'm seem to getting here, correct me if I'm wrong, investors looking to kind of dip a toe back into the oil game. It's come back a little bit. The oil price is about to give $50 a high five, which
it's almost 80% up since the $25 range.
It seems to me like these names that have stuck around, like the Devon and Denbury and stuff. It seems like the guys that have waited this out, that can go in there and specialize and make strong use of these assets are a decent way to go.
That's true, but they've also moved quite a bit since February in terms of price appreciation. So don't get ahead of yourself because the markets might have. So if you want to dip in a little bit, like you said, dip in is probably the best way to go right now, because who's to say that these oil prices aren't going to fall right back once Canada brings 1.2 million more barrels on a day back to what they were originally producing before these fires started in early May. So we're looking at, some potential oversupply again in the very near future.
Are there any subsectors that you like right now before we head out?
Subsectors
like pipelines or something.
Yeah, I would stick with the pipelines. Just not necessarily because I'm in love with them, but if you want to invest in energy, the bigger pipelines that dealing in natural gas, because it's cheap, but we continue to use it. So the pipelines are full. Demand for natural gas isn't expected to decline like demand for oil. So I like the pipelines. Probably stay away from any producers under a certain market cap. You're looking at the big guys that can weather anything. And I would also steer away from shares that have popped significantly.
Got it. Cool. Well, thanks for your thoughts, Taylor.
Appreciate it.
Have a good one. And that is it for us, folks. If you're a loyal listener and have questions or comments, we would love to hear from you. Just email us at industryfocus@fool.com. Once again, that is industryfocus@fool.com. And as always, people in this program may have interest in the stocks that they talk about, and the Motley Fool may have formal recommendations for or against those stocks, so don't buy or sell anything based solely on what you hear in this program. For Taylor Markerman, I am Sean O'Reilly. Thanks for listening, and Fool on.